Good morning, everyone. Hey, this is Rick Kaufman here with LMA Trading. Hey, it is Tuesday morning. Can we say repeat? Repeat of Monday morning. I tell you what. Uh, are you feeling frustrated? I know I am frustrated. This buy the dip mentality is just crazy. I've got some thoughts I will share with you here, and we will on buying the dip, especially if you're rather risk adverse like myself. Um, well, Warren Buffett has two rules. Rule number one is preservation of capital, and rule number two is don't forget rule number one. And in this market, I don't know. There's a lot of people making a lot of money, but I think there's a lot of people losing a lot of money, and I don't know which one on the balance of scales who's winning the game here. But before we jump into our pre-market prep here, just give you some housekeeping and just so you know that the information I talk about here is not financial advice. I don't give financial advice. I don't send out tickers or those trade alerts. I don't do any of those things. This is purely my part of my trade journal with my pre-market prep, and also it's part of my trade journey as an older trader, as a over 60 trader. So it doesn't matter your age, but preservation of capital, a risk. You want to make sure you're in the game tomorrow. So, but you can't be sitting on the benches all the time. But cash is a position, and if you're unsure, then I would, I have the majority of my money is in cash, just, sitting on the sidelines, waiting for the right setup. And I'll tell you what, the setups, markets are way overextended, as you know, and it's being reported today that the S&P has doubled since its March low of last year, and typically it takes about 1,000 days to double, according to what the experts on CNBC tells you. So, so just remember you're trading your own money. So you're putting your own money at risk, and stocks and options are not suitable for everyone, and they do have risk. You can lose all your money if you put all your money in the market. So that's why cash is a position. So with that being said, let's go ahead and jump into our pre-market prep. Let's take a look at what the market might be telling us today, or what it might not be telling us today. And right now, by the looks of things, it looks like the bears are definitely in control of the pre-market. The VIX is trending upwards. It's at 17.13 here this morning. Excuse me. Hopefully you got your coffee here, because it is 6:59 in the morning. So with that being said, let's go ahead and switch over to our charts, and we will start with the Dow. And this is a very bullish, this is a bullish market. The Dow is in a weekly, it is in a weekly squeeze, so the long-term trend is up. It's just continually trending upwards, and just kind of so it's I really, it's just trading in this range of 1 ATR to 2 ATR. And so this is, if the opportunity comes and pulls back to the 21 on a long-term chart, then this is buy the dip. People are buying, as you can see here this week here, the bulls bought it all the way back up and closed on the high for that week a few weeks ago, about a month ago. On the daily trend, it's pull back to the 21 or to support, and then rallying. We got a huge candle here where very, very bullish looking trend here, but we are pulling back. I think this is the nature of the markets. The markets are slow. There's not a lot of volume to continue this, so we're seeing this pullback in the mornings, and this buy, and then the buying comes in. Will it be a repeat of yesterday? Um, I don't know. That's why it's hard for myself. It's hard for me to make a decision when I see the lows on the day. I don't, because I'm anticipating a larger pullback. And so every time I see this pullback in the morning, is this the beginning of what's has been forecasted for the last couple months? Or is this market still just going to be buy the dip? Right now, you know, I guess I could tell myself, well, play the buy the dip. And, I've got some short hedges on. I got shorts on IWM, and I also have short plays and puts and put debit spreads on on Goldman Sachs, and those are working out fairly well right now. So, um, but I'm looking for long plays. I'm primarily a bullish trader, and so I look for these long plays, and but I look for the right setups. Let's jump into the Russell. The Russell is, again, it's pulling back here below below this, you know, the 21, and we are, at basically what appears to be support on the Russell set over, so what is that, about the 2170, roughly thereabouts, or 2175. So whether or not we get a bounce, we are in a daily squeeze and we are in a weekly squeeze. The weekly chart, the long-term chart, is in a downtrend. But long term, we have positive stacked EMA, so we haven't got the crossover on the EMA. So some might say that this could just be consolidation for the continuation to the upside. Um, that so this is what I have seen, and I think others have seen, that where we are in this particular time, that really just, it's in a tight range. That's about the best I can say to it. Everything's trending downwards. MACDs, all the indicators are pointing to, that this current trend is, it. In other words, the Russell's going lower. Whether or not this will bounce here and pull back, we'll know by the end of the day, because it is at or close to support levels now. Daily range is 38.9, and we've already moved 25.8, so we've got some more room to the downside. So let's see if it breaks that support down here at the 2170, or we go lower. So I'm going to add a trend line in here for myself, so that way I can kind of see that. So let's just add it right in there, because that's, it's actually like 2164. So let's see if we can hold that. And if we get a close below that, then I think we'll probably see, the next line of about, 2100, roughly thereabouts, and that would be the next level of support, probably, to see if we can get that, because we've got this hammer candle here that would indicate that would be or should be a strong level of support, as you can see on our weekly chart, and that's pretty much where the my green trend line's drawn. So let's jump into the Qs, and let's take a look at them. Charts are very similar, I think, in most cases. Our squeeze histogram is printing a daily squeeze here for the last 2 days. We have decreasing momentum on the weekly. MACD is starting to show in a decreasing momentum also. We've got decreasing volume on light volume. But we, had nice bullish candle here, but again, not seeing the follow through and the continuation. So I believe this is a good sign of some weakness, just lack of conviction on the move. And again, you know, asking yourself when the cash session opens and this pulls back, is this a buy the dip? And just to point out to you, yes, this is yesterday's ticks. When the market opened, we pulled way back below the 800, and basically for a good part of the day, the ticks really were struggling to close above the zero line, and not towards the end of the day when the prices started moving up, the ticks start to show the buying was starting to pick up. So a lot of selling in the morning, and some pressure there. So and then we started seeing some buyers stepping in, and as indicated on the ticks, and that's what we see here in the candle. So just not a lot of conviction and follow through. So we may have some more downside, but I would be looking at this you know 14,922 roughly the low. What is the low of that candle? The low is 14,917 is the low of the candle. So that's what I would be looking as for support here on that level. So we'll see. Would probably be trading in this range and consolidation before we, and then we'll probably see a breakout in one of the two directions on the cues. As I said earlier, the VIX over here is pulling. It's at 1712 now, but pulling up towards that 20 line, and that 20 line being where is it? Come on down here. Yep. So that 20 line right here is the line that it's kind of my line in the sand. With the closer we get to that, the more volatility. Anything over that, the markets have a tendency to be extremely volatile, and so that's when we like to begin to look at our SPXs and start looking at those on our put credit spreads for our income plays. And so let's jump into the S&P. Again, still very bullish chart, trading in this very tight range and just pushing higher each and every day. Again, similar candle, very bullish candle, set the low here, bounced off support right around the 44.33. The low on that candle is 44.32.5, and then it went on to set a new high and close at the highs pretty much. But again, not seeing the follow through, decreasing momentum, decreasing RSI, MACD just not showing a lot of momentum. Again, we had some, on the chart, we had some pretty decent volume come in, but still, that's still relatively light volume when you consider, look back here, that was 1.8 million, and this one here is 1.17. So just not, which is from, again, what a lot of the experts say is pretty typical for August. And so we'll see, it just, that's what makes this market tough to figure out what it's going to do. This just looks like, at this point in time, if this candle continues doing what it's doing here and pulls back, bounces support and pulls up, we've got a identical candle. Or if this closes on the lows, then we've got a very bearish candle, and then I would probably look for this to go to the downside. So so we probably not going to come out of the gates swinging for the fences or swinging even for first base this morning. So we're probably going to sit back and let this kind of wash out this morning, and look at some charts. And if we take a positions, probably be taking positions late day and towards the close, and just looking for the right setup for us. We do have positions on, let's see, we have a position on GS, which is Goldman Sachs. We have a put credit spread. The only thing that concerns me right now, we are looking, right now the open looks to be probably somewhere between $3 to $4 lower this morning. So if that's the case, we would be opening, looks like 404. So we're going to be opening right in here. This candle concerned me yesterday a little bit because it pushed up. The financials have been very, very strong, very bullish. And again, this is a bearish candle, but it closed, or no, I'm sorry, a very bullish candle. As far as a hammer candle, where that's hammering out the bottom, that possibly that this could have been support close to the 400. We'll see. I would like to see this open and then break that resistance and then possibly close below. This is our first price target and our second price target. This is where we've got puts, put credit spreads and or no, put debit spreads on this, and we also have puts on the on Goldman Sachs. So we're looking at this to the downside, decreasing volume, decreasing momentum, MACD. Again, not a whole lot of conviction and follow through here, and showing some weakness. And so, we'll see what happens here. The other one is the IWM, so which is the Russell, and so that's it's the Russell ETF. Excuse me. So again, similar, we saw this kind of pull back here and drop down. So, we talked about the Russell already, but just to kind of give you an idea, we're opening lower here today. By right now, if this continues, at least $3 lower, and we have a daily range on the IWM as $3.06. So it looks like we would be opening up close to 1 ATR lower than where we are, which is good for us. So this is a daily squeeze. Momentum moving to the downside. The RSI yesterday broke the 50 line, so we'll probably see this going down. Weekly squeeze is momentum is carrying to the downside. So with momentum showing strengthening to the downside. So our position here is looking pretty solid. Look for, my biggest question is, do we add more? For myself, that's kind of what I'm looking at. Do we add to this or open up additional positions and play those? So we'll be considering that here today. So with that, that's my pre-market prep. Feel free to comment. These videos are for my education. It's for my review. Talking through this helps me see things too that maybe I wouldn't see otherwise, just kind of looking at the charts. I feel like I'm having a conversation, even though I'm having one with myself. But feel free to make a comment below. Let us know what you think of our analysis. We'd really appreciate it, good or bad. We're at the end of the day, we all want to be profitable, but at the end of the day, we can all glean something from each other, and that's what's good about this. So appreciate that, and we will talk to you tomorrow. Have a good one.